Okay, so we're going to have a fairly impressive gap up after the market kind of got smacked around last night in early Asia. We have pretty much been going straight up since the since the London Open, and it's been an impressive rally. I want to bring this over here real quick and show everyone, make sure everyone knows what we're looking at overnight. This is both the Nasdaq and the ES, and we are rallying pretty much straight up. There's no other way to describe it. So this is what happens when we get a this is what happens when we get an extremely oversold in a straight line and too many people short into the hole. Now, there's a major caveat this morning. The head of the ECB speaks at 9 a.m. Central Time, and he can be a big market mover. So be aware that what he says can actually have a big influence, and it can cause the market to run to your stops really, really quickly. By the same token, if the market gets stretched, it can provide nice long and short entries. So with the gap up like this, my first concern out of the gate is an open drive higher. I actually don't think we'll get an open drive higher, but I'm certainly alert for it. The reason being, I want to go over to the market profile chart real quick and take a look there as to what's happened in the past so that we'll have a clear idea. Okay, so let's go to the daily here. So in the past, when we've had a large gap, far back we can go here after down, and it's going to be a while since we've had one of these reversals. So far back we have to go. We've had a gapping. I'll show you exactly what it looks like. Okay, so here's a small example where we had a series of down days. We finally got some panic selling at the bottom. We gapped up, and in this case, we gapped towards the top of the range, and we drove out of that range into the top of the prior balance area, right? And then the following day, we sold back off. But another example, right? This is an example where we were balancing, but we were on the way up. Really, reversals was way back. Let's see if I can get back far enough here without the market. I can't get back to where the example, except to say we had it and I didn't have enough data, so I apologize about that. I'll try to get it up later this morning. The situation we're facing in terms of a drive is something similar to this. See how we gapped out of this area after having a little bit of pullback, and then we just kept driving. The only difference is here is we're actually gapping above. Let's pull this back down. Okay, so we're actually gapping into this 1780 area, which I believe right now we're trading at 1777.50. Okay, so this is going to be a critical area because this whole area right here was the support for the prior balance area. This is where we kept rejecting out of this lower area. And so it's important to note that we really aren't gapping out of this area yet. And usually when the gaps get up and run, we'll gap somewhere up in, we would gap something like this, possibly test the downside, right? And then run up. It's going to be critical that we get over the 1780, 82 for any further upside. And so the real possibility here is that the overnight move was stolen and that we'll end up in balance the majority of the day. What are going to be the clues out of the gate that we are not an open drive? Okay, so first of all, when the tick opens, it won't be very high. It'll be closer to neutral. Second indication. First of all, we have to get above Globex high. So 1779.50 becomes critical, right? The third indication will be lack of rotation lower. It's usually 2 points or less and mostly sideways. And we may go sideways right before the ECB speaker, right? I'm trying to see if there's any other clues. Usually in the first hour, and particularly in the first half hour, we will not get below zero. We will not get below zero that entire period of time. Another clue that we are possibly in an open drive higher and a trend day up. I don't think we're going to have a trend day up, quite frankly. I think the overnight move was stolen. We got to an extreme overnight, but we've balanced. What we've come, all we've done is come all the way back up to what is now the top of this balance range and the bottom of the prior range, and that's what this is telling us. So let's go look at some possible scenarios for the overnight. First, I want to look at the 24-hour before we do that. And the fourth clue, NQ. NQ was weak Thursday and Friday. There was almost no buyers there, even when ES was rallying. NQ was unable to do pretty much anything. If we can get over this area right here, right, the next area of major resistance doesn't come all the way up until this almost 1798, right? So there's a large vacuum. I'm not saying that we'll get up there, but that's the next area where we'd have a clear shot at taking a short and looking for a rejection, right, in terms of a bigger picture. That's a 24-hour. On the daily, and this is maybe why I found the gap because I was on the wrong chart, so I apologize. Let's go to the daily really quick. Here we go. So we're gapping up just above this level and into the bottom of the prior trading range, right? Just underneath 1780. If we look at prior examples of where we gapped, let me see if I can find that here real quick now. Here we go. This is looking for. So you'll see in this case, when we gapped up, right? We gapped up, but we gapped into the bottom of the range. We traded down below it. It got squeezed clearly overnight so that when we gapped up, but the difference is between opening here and being at the bottom of this range and opening here and being back inside the range, it's a very small nuance. It doesn't mean that we can't have an open drive higher, and certainly we still have about 13 minutes before the open. It's just that normally when I see these gap and goes, they're doing one of two things. They're either completely gapping out of the range, right? And then we end up with a balanced day like this, which is actually, during the U.S. session, one of the possibilities, right? We're unable to get above Globex high, or we get above Globex high, get rejected, and we get back down underneath. We could end up with a balanced day. Let me highlight this because I don't think y'all can see what I'm talking about here real quick. I apologize. Okay, what I'm talking about on the balanced day is right here, where we gapped up, right? But we ended up just in balance for the whole day. The move was stolen overnight. The other option is right here that I was talking about, was that when we gapped back into what was the bottom of the trading range, right? And back to where we were, the original breakout area. And then we took off. In our particular case, if we look at where we're going, okay, we are going to have a gap, but we're gapping. This was the bottom of balance, prior balance right here, essentially 1780. Yes, we did dip in a couple of times and come back up. But when we broke, the close was below that 1780 clearly, right? So we're right here at 1779, 1780 area. And normally, like in the situation of this gap up back here, where it gapped and went, we're not gapping back above the 1780. Doesn't mean that it still can't go, but we need to see it above clearly. And it would be an easier call to say trend day up if we were gapping above 1780. It would be a much stronger possibility of a gap and go. Instead, I think we could end up with a balance day or some backing and filling, particularly considering how far we've run overnight. The overnight lows were all the way down at 1754. So we already have a 16-point move overnight, and it's pretty rare for us to get a 20-point, 25-point move even in a 24-hour session, right? So something significant is going to happen to keep us driving up. That being said, on the open, I'm not so sure that I want to fade it. I think I'd prefer to see good rotations back down into support because clearly there'll be buyers below. So let's take a look at what some of the possible scenarios are, right? Switch back over here real quick. Okay. So the white zone is sitting here at 1770.50 to 1772 specifically, right? If we are opening at 1770, well, it looks like 1777 to 1779, right? That puts us right into initial resistance where we're opening up. What I would like to see is a quick test of the Globex high, and then either a rotation down into Friday's highs, which if we got to the back of this zone, if we could push to 1780 and then push down to 1774 3/4, that's almost a 6-point rotation, and I would look right to the back of the zone, possibly for some tick divergence, but I'll probably be interested in, if I'm an aggressive trader, and taking a trade right here. If I'm a non-aggressive trader, I want to look at taking a trade into the white zone, and I almost certainly will take a trade first time into the white zone, and I'll probably take it at the top of the white zone. That'll be a really nice stretch either way, whether we open right here at 1777 and we sell off directly, or if we test the Globex highs, it'll be even better. Interestingly enough, this trend line comes all the way off the highs, which is why I highlighted it. We've been underneath it the entire time. So if you go draw a trend line from the very top, and you'll see we're opening right into the bottom of that trend line. So two things could happen there, right? If we have an open drive higher, we open at 1777, we get up above, right? And then we reject that down below. We want to see how we react off the top of this trend line, right? If we can hold the top of this trend line, and then we have a good chance of moving higher. And there's not a lot between 1780 and 1786 and change. There's not a lot holding us there. And if you look back prior, this was a pretty bad chop zone actually. Between 1782 to 1786 was really a terrible place to initiate a trade when we were in this prior session. And I'll look to avoid that area the first move in. If on the other hand, you have to consider the scenarios, right? We can bounce all the way down along this trend line, right, and still be above. So it doesn't have to just come the first touch into the trend line. We can move all the way back down. As long as we hold above that trend line, the possibility for a nice upside move is still there. The other scenario is, and the one that I would probably favor, only because it fits into my trading scenario a lot nicer. Hold on one second here. Is that if we opened up and we came up into this, we reject out right away, right? We come down into the white zone, and then what would be nice is we get that rotation up, right? That'll probably push us to 9:30, 10 o'clock. We usually chop around in that period. But if we could get above this downtrend line over lunch and then push up, we have a chance for a nice squeeze. Now, you got to remember, it's holiday time, and so it's going to get thinner and thinner and thinner as we get through the course of the week. The other thing to consider through the day, right, this is the, let's go back to this chart here real quick and just take a look at a different perspective. Okay, NQ has led the market, and also TF. TF is higher this morning. It's also opening near the highs. I'll have an eye on both of those. I would be surprised to see the market continue the rally without participation from NQ. And as you can see, if you saw the example in the trade review, you saw how even when ES was rallying on Friday afternoon, NQ failed to participate, and as a matter of fact, broke to new lows, and there was a divergence. ES didn't break to new lows while NQ did. I'll watch to see if there's a divergence again between ES and NQ. And one of the possibilities for that happening could be that there's a rotation out of NQ into more blue chip stocks. I'm not a macro guy, but just when I see those differences, it makes me wonder whether there's a change going on, and I watch to see if that's going to continue, whether ES takes up the leadership as opposed to NQ. So the other possibility here is that there's another trend line on the 24-hour chart. Let me blow this up here for a second. Yes, that'll take us right underneath this 1785 area, and that's from this trend line that actually goes right to the highs, right? So that would be another logical place. The possible rejection is in this 1786 to 1788 area would be a logical place. Also, coming back for a downside test, right? So you got to remember, overnight, we've moved almost 16 points. If we take back 5 to 10, that would certainly make sense. And on a 24-hour basis, it would put us right down into the backside of this trend line, right? Down to 1770, which would make sense. A pullback, it would be about half of this move overnight, right? And then it would make sense that we move up and back towards 1780 for a possible close. That's the third scenario, and this is actually my most desirable scenario, mainly because it'll let me set up a big fat trade without having to chase up. Also remember, when we're managing the trade, and we have about 4 minutes to go here, right? My objective specifically, I trade leverage concentrated accounts and trade size. And my objective is to consistently grow the number of contracts I'm trading. If I was just trading a few contracts relative to my account size, right, where it would have a minimum impact, I could afford to chase higher. But instead, what I'm looking for is simply only the highest odds trades. So one thing that I want to do, first of all, this morning is normally I'm looking for a 6 to 10 point rotation back. I'm going to push that back by a point and actually say I want a 7-point rotation back. Why? Because I already know the volatility is going to increase and that the range is increased as well. So I'm looking for 7 to 10 back. Now, if the 7 comes right at the back of a zone, let's say it's a half a point or a point past, I'm just going to concentrate on the back of the zone. The zone is where I want trade location. I do not want to execute outside of that zone, right? The other thing that I'm looking at with the increased volatility is that on my trailers, if your trade plan calls for leaving a trailer, right, I might shoot for, instead of 3 points on the second scale, I might shoot for 4 or 5 on the scale based on how the action goes. If we go into balance, it's key. If we don't break that 1779.50, right, it's very likely we're going to have a balance day. And if that's the case, we want to execute on the edges and stay out of the middle. You'll see the middle because you'll see the volume growing on it on the market profile very quickly. So just to recap really quick, I'm watching NQ out of the gate. I want to see if ES can break that 1779.50 and hold. I'm looking for a possibility of a trend day up, right, with the other clues that we'll have. If we reject, or if we get above 1779.50, then reject and get back underneath. I'll look for a nice rotation down to look for a counter trend trade. And I'll look for it to go into the meat of Friday's range. Really, that's all I have. If anyone has any questions, you're welcome to hit me on Skype, Twitter, or StockTwits. And that's all I have, guys. I hope everyone has a wonderful day, and we'll talk later.